Welcome to everyone to this new video tutorial. In this new video, I want to show you how it's possible to improve the performance of an initial trading system without focusing too much on the optimization process and the optimization of the input parameters, but touching the logic of the trading system, such as excluding some hours of trading by custom session, by using a custom session, or by applying market volatility filter. Let's start from scratch and want to just to explain you the initial trading system, which is applied on the over the mini S&P with a 90-minute bar, um, and the signal is taken from the data 2. On the same chart window, you can in TradeStation you can use the data 1 where the trading system can work, and you can take the data or the signal from data 2, which is the lower part of the chart window. In this case, the data 2 is the same instrument, mini S&P, and it's a daily bar. The system is a basic breakout system. It's a breakout system which goes only long when the close of the last bar of data 2 is breaking a certain level. It's a breakout system, the typical logic of a breakout system, and we apply even a filter over these signals, such as a momentum filter, which compares the close of data 2 with the average of the last n bar. That's the basic idea. To do that, I'm focusing only over a certain hours of trading. The starting idea, comes from the certain condition which are applied when you trade in the during certain hours. If you go on the website of TradeStation and if you have a look to the account and margin requirement, for future, you might see that for the mini S&P 500 or mini Nasdaq, mini Russell, the initial margin can be much less. To be more precise, is 20%, 25% of the initial margin if you trade during the day trading hours. Day trading hours is Day trade rate is valid from 8 till 4:15 p.m. ET Monday, from Monday to Friday. So only during the day. If you don't go overnight, that's important. Our system, in fact, does not go overnight, and it closes the position and the end of the day, which in this case is the end of the day trading. So from 9, once again, from 8 to 4:15, and in fact our trading system exit on close at this time. Um, the reason of operating during this time is not only because I want to use a lower margin because maybe I have a small account such as 10,000, 20,000, but primarily is because if I have a good trading system that operates only with one contract, if I don't have a very big account, I might tend to increase the amount, the size, the amount of contract, and maybe I can increase the net profit without uh, without issues due to the margin required if I operate only during this time. And also, I don't have the risk of going overnight and to see gap on the day after. So if I have a very good trading system with only one contract, then I can think to apply a good position sizing method, which is something that we explain um, onto our course of trading automatic and money management. When we have a good trading system, we might think about to use some specific position size methods such as fixed fraction, fixed ratio, percent volatility, and according to the method which I choose, I might think to use not one contract, but maybe two, three, four, and then to come back to one, depending on the method and market condition. But if I have a very small account, it's very tough to use more than one contract. But if you operate during this day trading rate, then the margin required can be lower. Then I can think about using even two contracts. So back to our system. It's a system that goes only long with the breakout logic and a certain filter. Um, the basic idea is not bad, but unfortunately, our initial trading system has faced a very bad condition during the August September drawdown market. That's because in September, you might remember September 2015, there have been many false breakouts, and in this case, our long only trading system is suffering a lot because when you have a breakout signal and then the market turns around against you, then it's painful. That's the point. So the idea is the question is how can I improve this trading system where once again I say we use only one contract for the mini S&P. It goes long only because we don't want to see this very bad drawdown here. At the same time, I don't want to stress too much over the optimization and changing the best parameter. So the idea is, hey, we see that during the initial hours, the first 1 or 2, 3 hours of when the market is opening, there is very rumor, there are many turbulence and false breakout signals. So why don't we try to avoid these first 2, 3 hours? That's the first improvement we are trying to test. Also, we have applied another filter to filter the noise and to avoid we want to avoid to operate when there is too much volatility in the market. And to do this, we just have used this condition. I check the difference between the open of 5 bar ago for data 2 and the close of data 2 of 1 bar ago. I want that this difference is lower than the maximum difference of the last 10 bar. That's the idea. So I take the high of the last 10 bar, the low for the last 10 bar. I make a difference, and I want to operate when this difference is not too high. That's the basic idea. It's just a volatility filter. Also, once again, I said I want to avoid certain the first 1 or 2 hours of when the session is starting. To do that, you can even work on the custom session because by default the TradeStation uses the regular session, but you can create a custom session as you want. That's what we have done even with the starting trading system. Format symbol, double click, properties, session. By default, you have the regular session, and you can create a custom session to operate only during the hours that we have specified here, the day trading rate. Nothing very complex. With this extra filter, we move from this equity with this very bad drawdown for the one contract long only to this new one, and you see the results are much better. There are phases, there are of course some phases where the profit is flat, but it's fine as long as my drawdown is not very high. It is okay. And once the long signal is pretty okay, why don't apply even the short signal? And so we move from this second trading system to a third one, it's always the same instruments, same time frame, same data too. We have just applied the improvement that I have described before. So this is the case of long only. And now I'm applying even the short signal as well, and that's the final result. It's okay. There is also, you see here, this final part in September, which there is also some small drawdown that is acceptable compared to the initial one. So now, uh, with this discussion, with this demonstration, what I want to tell you is that sometimes you must to work not only on the over the indicator of the input parameter to optimize, but you might to decide to avoid certain hours of trading or to apply a volatility filter. And once you have a good trading system, a good equity for one contract, then, with this advantage, where the trading system that we have created once again is operating only during the day trading hours, only during these hours, and we are also excluding the first 1 or 2 hours when there is much more turbulence. So once you have a good trading system working on these hours, when the margin requirement is much lower, then you may think about, with this starting trading system with one contract, to use a position size method where you might decide, according to the position size setting and the market conditions, to use two contracts or three or even four, because you have a larger margin requirement and because you want to improve the final capital, and because the margin requirement is lower and because the initial trading system is pretty okay, then you might think about using more than one contract and to use a specific position sizing method. In with our course of money management course, we explain how to optimize, how to improve the position sizing method. There is a very fantastic tool which is called MSA, which helps you to find even the best setting for the position sizing method. We also provide our strategy, our code to decide the specific position sizing method. And by the way, we provide during this training. So if you decide to participate to this training, I invite you to give a look, to keep a view to the summary of to the program. And if you are interested, don't hesitate to send me an email. Once again, there are some bonuses such as this trading system and also the code to choose your best position sizing method. Okay, that's all, and thank you very much for watching this new video tutorial. I give you appointment for the next video then. Thank you. Bye bye.